What's up, YouTube family? It's your boy Alan, and I'm here with a trading psychology video. And the topic of today is why the odds are stacked so much against the retail trader. And if we are to define a retail trader, this is someone who's trading their personal funds, um, and this is someone who's probably self-taught in the financial markets. And when you look at it, the competition that you're going against are the institutional banks and the hedge funds. These are like really big players. So when you get really deep into it, the retail trader is basically a little fish in a big sea, and that puts the odds not in your favor. So I've often seen that it comes down to three things, which is knowledge, psychology, and structure. So for any retail trader to stand a chance in the financial markets, you need to think like a professional. That's just it. Because if you really look at it, you're a little fish in a big sea. So the big guys can just literally eat you. Your best chances of survival is thinking like the big guys, trying to at least be aligned with the big guys. And more often than not, the retail trader, they don't really have this type of information. Most of the information that they get is literally on YouTube. I'm not saying that's a bad thing, but it in itself is a bit limiting. Because just imagine, these are big players. Do you really think they would spend their time on YouTube? I mean, I know I'm on YouTube and trying to tell you these things, but that's because I'm also a retail trader. I've been in the game for like 5 years. And the reality of this is it takes a really long time. I've been fortunate enough to really have my hands on some deeper knowledge of the Forex market. So in some sense, I'm also trying to help some retail traders out there, but the average retail trader, they don't know this, you see. So it does come down to having the right knowledge. It comes down to applying that right knowledge in the financial markets. Another thing is psychology. So the professional traders, these are traders that actually have psychologists that are working with them, monitoring their state of mind, their emotions. They've got like psychology managers that actually track their performance, so that if they go off track, these are people that can actually stop them and let them know. But you, on the other hand, you're literally your own boss. You're literally your own person. You don't have people that are checking up on you. So if you're not in check of your own emotions, who's going to do that for you? So that's something that you also have to learn. Otherwise, you'll be driven by fear, driven by a lot of emotions, of which trading is a numbers game. It does not run on emotions. That's something that we need to know. So if you are not in check of your own emotions, your own state of mind, that's really going to put the odds against you. Another thing is also structure. Like I said, if you are going to want to be a professional trader, you've got to think like a professional trader. And when you look at professional traders, these are people that have got routines, structures that are in place to put the odds in their favor. Because when you look at it, the market is huge and it's difficult to master. So you obviously need to have some levels of structure. You need to set your own rules. You need to set your own criteria that you're looking for. And if you don't have these structures, you're really going to struggle. The average trader is probably going to show up on the markets more often than not randomly. They're going to take really long breaks, so it's going to be hard to like really measure consistency. For example, a retail trader is probably going to show up like on a Monday and skip Tuesday, then on Wednesday. So within that, there's really no structure, and they probably don't even have the clarity of the criteria that they are looking for in the markets. But on the other hand, when it comes to professional traders, they really have back-tested systems, back-tested rules that are data-driven, mind you, data-driven, to prove that these systems have got a positive expectancy. And this is the type of work that the retail trader doesn't know how to do or how to get access of this type of information. So this is not a video to discourage retail traders out there to say, so you don't really have to put in the work, like the odds are against you, so you don't even have to try. No, it's just awareness on what you're going up against and what you actually need to do. So in the upcoming videos, I'm going to be just sharing my thoughts on psychology that I know help people to have a better understanding of the market and actually see the markets for what they are, so that they actually stand a better chance of being profitable in the financial markets. I personally have been trading for like 5 years, and it's only now that I'm actually starting to gain some consistency and some realistic understanding of the markets. And quite frankly, the markets can really be brutal, especially for the retail trader. So in the upcoming videos, I'm also going to be sharing my experiences and some trading literature that actually helped me to like level up my understanding of the charts, to sort of like come to a point where I'm more or less in sync with the markets, like having a realistic perspective of the markets. So I really hope you enjoyed this very short video. It's really not meant to discourage you, but to just raise your awareness of what you're going up against. So I really hope to see you guys in the upcoming videos, and sharp.